Can a second home be considered a 1031 exchange? Investors often wonder if they can use the 1031 exchange for their second home. The rules surrounding 1031 exchanges are specifically can be somewhat complex when it comes to personal residences and second homes. This lesson will clarify under what condition a second home can qualify for a 1031 exchange. So we already went through what a 1031 exchange is. One of the key criteria to qualify for a 1031 exchange, the property must be held for investment or for business purposes. So which means that property is primarily used for personal use, such as primary residences or vacation homes, generally do not qualify. However, there are exceptions when a second home is involved that it can be considered for a 1031 exchange. So when would a second home qualify for a 1031 exchange? So it must be demonstrated that the property was held for investment purposes. So the IRS have specific guidelines to determine this. So the first rule is minimal personal use. The property should have minimal personal use according to the IRS. Personal use should not exceed 14 days per year or 10% of the total days the property was rented, whichever is greater. The second thing is the rental requirements. So the property should be rented out at fair market value for at least 14 days each year. So to show that the property is being used to generate income. The third thing is documenting investment intent. So it is essential to maintain documentation that supports the property used as an investment. So this includes rental agreement, advertisements for renting the property, and record of rental income. Let's look at an example of a qualifying second home. Consider an investor who owns a beach house. They use the house for 2 weeks each year for vacation and rent it out for the rest of the time. If the house is rented out at fair market value of at least 14 days annually, and the personal use does not exceed 14 days or 10% of the rental period, the property may qualify for a 1031 exchange. Some steps that would qualify a second home for a 1031 exchange. So the first step is to limit personal use. Make sure that your personal use of the property is within the IRS guideline as described above. The second step that you want to make sure is that you rent the property at fair market value. So rent the property out for at least 14 days per year at fair market value. The third step, make sure you maintain proper records. So keep detailed records of rental income and documentation demonstrating the property is held for investment purposes. What are the benefits of qualifying for 1031 exchange for a second home? So if you decide to sell, right, of course, it's going to be tax deferral benefit. So you get to defer capital gain taxes on the sales of the second home. You can invest it in a new investment property. The second thing is investment growth. You can use the proceeds to invest in more valuable property or diversify your real estate portfolio. The third thing is income generation. So you continue to generate rental income while benefit from tax deferral advantages. So when you do 1031 exchange, you want to exchange for good apples, right? So you want to make sure that your replacement property gonna generate good income or consistent income, whichever that qualify for your investment criteria. While a second home is typically considered personal property and usually does not qualify for 1031 exchange, so there are some exceptions that we mentioned above. So by limiting personal use, renting the property at fair market value, and maintain proper documentation, you can demonstrate that the property is held for investment purposes and potentially qualify for a 1031 exchange. So this strategy allows you to defer capital gain taxes and grow your investment portfolio more effectively. Understanding and following these guidelines is crucial for success using a second home in a 1031 exchange. enabling you to maximize your real estate investment benefits. With that, let's move on to our next topic.